Vladimir Putin announced this week that Russia will begin using the Chinese yuan for international payments instead of the dollar. Saudi Arabia is also in talks with Beijing to do the same thing. Speaking of Saudi Arabia, meanwhile, they are in talks with Iran as well to consider an economic alliance with China and Russia. And they can even be joining the BRIC countries, which is an acronym for these countries here: Brazil, Russia, India, China, and South Africa. These countries all have emerging economies. So what happens if our economy and the U.S. dollar are no longer the world's dominant currency?
Interesting outcome of the three-day summit between Vladimir Putin and Xi Jinping got limited media attention. Describing their talks, Putin said, "We are in favor of using the Chinese yuan for settlements between Russia and the countries of Asia, Africa, and Latin America." So, the world's second largest economy and its largest energy exporter are together actively trying to dent the dollar's dominance as the anchor of the international financial system.
He is the master at threading the needle, Becky, and in this case it was 10% politics, 90% business. In terms of the politics, a rare sign of goodwill between a Western business and China leadership. He was upbeat. His language at the China Development Forum said, "I'm thrilled to be back in China." A big distant contrast with what TikTok's reception was on Capitol Hill. And then there was a room of applause. And so there's the political piece, which Cook has for years been astute at, even in the Trump administration, managing through some of the tariffs. He's done a great job with that. And then there's the business side. And this is the threading the needle piece of it. From a business perspective, of course, Apple has 20% of its revenue comes from Greater China. That includes Hong Kong. If you back out Hong Kong, it's about 15% comes from mainland China. The U.S. is 42% of business, so China's a big chunk, and his goodwill, his PR, undoubtedly is good for sales.
Yes, symbiotic. You know what? I didn't fault Tim for saying that, because it is.
No, it's symbiotic, but look, he had to go there and basically say nothing of any consequence because he's stuck between a rock and a hard place, right, Joe? He has to appease China because so much of his manufacturing and up to 20% of his business is there in China, not to mention the manufacturing. And he can't go out there and say, we're so upset with what you guys did last fall with these COVID lockdowns, and we're diversifying our supply chain to places like India. So he's really stuck between a rock and a hard place here, and what he can actually say and can't say. That's why I found it interesting that he did this talk on education and technology. No one's going to, poo-poo him for doing that, of course.
Right.
Welcome to the Crypto Teacher. And I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And guys, we see all over social media the end of the dollar. I know a lot of you asked me to do this video, so I'm coming back with it. Yes, guys, those who understand the fourth industrial revolution understands what's going on with the dollar. Remember, America to Babylon was used to take over the globe, and the tool they used was the U.S. dollar. Now it's time to even the playing field. Guys, is the dollar going anywhere? No, it is not, but it's definitely not going to have the same power. But guys, remember, we're going into hyper deflation. And we know the mainstream media is not going to talk about deflation, and they're definitely not going to talk about the fourth industrial revolution. Remember, the robots, algorithms, and drones are going to take over the economy. And we know they don't need health insurance. They don't need lunch breaks. They're not calling out sick. They're coming to work 24/7. And as America falls, we know China, the dragon, is going to rise with that digital economy first, with the fourth industrial revolution. They're going to lead us, and we're going to be following behind China. And we know all about the BRICS nations. But guys, we have Elon Musk, we have Apple, we have all of our banks, all of our big corporations are investing more and more inside of China, not including places like Saudi Arabia. So even though your mainstream media is pushing conflict, the business guys are doing what? They're building while the sheep stay distracted. Guys, we know how the Hegelian dialectic works. And guys, I was also asked about gold. And guys, we know gold has always been manipulated. If you have my NWO book, I go through the actual history. And we know last year the central banks were buying up gold left and right. And because we're going to be going through hyper deflation, gold is definitely something that I would have. I'm not your financial advisor, not financial advice. Please do your own research. But what does the crypto teacher teach you? Follow the money. So we definitely want to follow the central banks, and also China, we know, has been buying up gold also. And remember, the crypto teacher told you.
Well, Becky, I think the best way to do this is to look just at the basic numbers. But first, most importantly, we have to understand that commercial real estate has dropped in value simply because higher interest rates make borrowing costs higher, thereby limiting investors' ability to make deals. Now, FDIC-insured banks hold the largest share of CRE mortgages at 39%, or $1.7 trillion. 13% is held in CMBS, and most is held at regional and community banks. Now, this year and next, there is a huge pipeline of commercial mortgages hitting maturity that need to be refinanced. The big concern, of course, is office. Of the $270 billion of bank-held CRE loans maturing this year, about $80 billion, or 30%, are on office properties, and that's according to TREP. So property owners who need to refi are up against higher borrowing costs and lower property values. Mark Grant, chief global strategist at Colliers Securities, says everybody's scaling back their risk appetite for real estate loans. Office owners in particular are getting squeezed. $40 billion worth of these properties are now seen in distress. Now, because of lower property values and, of course, the current bank stress, several experts I've spoken with say deal-making has essentially ground to a halt and the CMBS market is largely shut down. A data expert at TREP, Manus Clancy, told me there is no capital out there for offices. Others are less bearish, but Willie Walker of Walker & Dunlop told me, if I were in office, I'd be holding my breath. Becky?
And a point that's really gotten lost is all deposits are not created equal. So the average deposit size at Silicon Valley Bank, a venture capital deposit of over $1 million, is a lot different than a $10,000 retail deposit that's in a checking account at your typical bank. So you're extrapolating examples here with venture capital-oriented bank Signature in Silicon Valley to the entire industry, and that's wrong. And the catalyst for the issues at Silicon Valley is they were forced to sell those unrealized securities losses. Right? They were forced to. You're no longer forced to do that, and hence my water, because the Fed is providing as much liquidity as possible. So there's lots of liquidity for any bank that does not want to sell their securities. You have tons of liquidity.
In the, doing the wrong things. And you didn't say that right at the beginning. I think you criticized the Fed for staying at zero for so long and letting the money supply grow. But then you said this is wrong-minded, what they're doing. How many out of the I think it's 475 basis points of increases, how many do you think they should have done? When should they have stopped? How long ago, in your view?
Oh, yeah. I mean, I think they should have stopped raising last fall. You're absolutely right. I started pounding the table actually last fall, saying they're in danger of over-tightening, and I am not surprised at the developments. And Joe, let's be explicit. Because I looked at the forecast of the Fed. The Fed is forecasting negative GDP growth over the next 3 quarters. By the way, not just forecasting, saying that would be the result under the most desirable monetary policy. Let me tell you what. They forecast for the year 2023, 0.4% GDP growth. Well, the first quarter, we know it's between 2 and 3% positive. The only way you get to the Fed forecast is negative growth. That's a recession. This is unprecedented. And the only way you're going to get negative growth is going to have negative payroll. Over 9 months. Chairman Powell didn't even mentioned that. No one in the press corps pointed that out, but it stuck out to me as one of the most frightening forecasts the Fed has ever put out, and certainly not in the interest of the economy. I mean, we were talking a moment ago about the dual mandate. I've been saying that they basically beat inflation late last year. This is just the residual on the service sector, but commodities, housing, virtually everything else is going down. They've done their job there. They did their job late last year, overkill, and I cannot be optimistic until the Fed, shall we say, gets it, and there's no sign they do yet.
And guys, we know in order for the fourth industrial revolution to rise, this legacy market has to be destroyed. And we know what the Fed was doing when they printed all this money. It would cause inflation, and then by them raising rates, they become the last option. Remember, guys, they already ran the test. They know all these banks have to rely on the Fed. They become the savior. And they have the chess piece Janet Yellen sitting at the Treasury. And we know she wears that purple and pearl for a reason, because she's the one riding the beast. And those who understand, understand. But we can look at all this commercial real estate empty. I don't know where you at, but where I'm at is definitely a ghost town. And when you're looking at commercial loans, remember, guys, they have to refinance. And again, we know no one's going to be doing it. So who's going to be the savior? That's right, the Fed. You cause the problem, wait for the reaction, and you run in with the solution. Guys, we know the NWO's playbook. If it works, you don't change it. And remember, the crypto teacher told you, because he knows when it comes to the New World Order, it's all planned out. You have a wonderful day.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
Cryptoteacher and the New World Order book, plus the 3 kids books. It's time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get on stocks, the Seaver, the biotech stocks. And while everybody's at home wishing they were still getting that free money, what are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate. Not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see the 4th Industrial Revolution, foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID-33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.